I don't hear them. I got the cable on the back. What do you mean speaker? It did, audio on, every action. But I don't hear them though. I can't hear them.
How's everybody doing?
Oh,
We're just gonna let folks show up here and kind of fill in the room, and we'll get started in about 10 more minutes.
I could barely hear them, but. No lo oigo. Screen, chat, participant. Y lo oigo un poquito nada más. Cuando dice
Hey, can the folks on Zoom, can you guys hear us all right? Do you want to give me a thumbs up? Excellent, thank you. So we're still gonna let folks show up, get in the room a little bit, and then we'll start doing introductions. We'll start right around 5:30. Hey, everyone, thank you for your patience. We're going to get started in another minute or two. Hey everyone, we're gonna get started. All right, everybody. First of all, welcome. Thank you guys for coming. We appreciate you guys' attendance. My name is Coleman Nee. I work in the marketing department for City of Boston Credit Union. We'll start off by thanking Peter Barton in the back. He's the assistant branch manager here at West Roxbury. Love Mahoney is right around the corner. She's the branch manager from City of Boston Credit Union today. Also at the front table, we have the vice president of marketing, Carla McCarran. We have our vice president of lending, Bob McCauley. He's going to go through some of the financing, the mortgage side of things when we get into it. To kick things off, we have Angela Bergin from William Raveis. She's going to cover the realtor aspect of everything. And then to wrap us up, we have Katie Frazier from Dalton and Finegold. She's going to go through the closing process, the role of an attorney, and the whole process. Like I had mentioned, and to the folks on Zoom, we will get to all questions. If we don't have time for them today, we will have someone reach out to you. So if you guys need one of these little slips, feel free to grab one at the end and just leave it with me. We'll have someone reach out to you, but we will have a little time at the end to get to some of the questions, depending on how quick we're kind of going through the process today. But with that being said, on Zoom, we will keep you muted until the end, and then I'll unmute you guys. If you guys can just throw up a little thumbs up if you can hear us okay, or if you need anything like speak louder, just punch it in the chat, and we'll pass on the word in here. But we will get started. Angela, if you want to lead us off.
Hi guys, I'm Angela Bergin, William Raveis in Milton. This is set up. First of all, welcome and congratulations for taking the first step towards home ownership. So I did out a little presentation. It's pretty straightforward. There's a couple of steps. That first would be gathering your down payment and just trying to find out where you're at before you even talk to a lender and stuff. Then after that, check your credit score, get everything organized as much as possible. And then I highly recommend keeping your credit as good as possible, because that will get you a better rate. And there's ways around it. Lots of different things you can do to get your credit score up if it's not that great. So your mortgage, getting pre-approved for a mortgage is a great step, and that they will help you with all of that. Getting your finances again in order, getting the best rate, better credit, better rate. And once you have all that, then you can know where you stand and take it from there. Find a real estate agent and find somebody you're comfortable with, knows the areas you're looking in, is knowledgeable about the market, and is willing to work with you, take the time to work with you. It's not a fast process, especially in a market as competitive as this. So find somebody who's going to go the journey with you and be there to support you. It's pretty important. It has to be a good fit for everyone. And then you start your home search process. So it can take a while. There's a lot of groundwork. It's good to just online, feeling out what the market is about in your price range, going to open houses, just constantly, just keeping up with the changes and how fast things are moving, and they're moving pretty fast. So you have to do, that's why it's important to have a really good pre-approval, have your bases all covered, and don't get overwhelmed, because it will happen eventually. Otherwise we'll be all homeless, so it does happen. It takes time, and you find in this market you need to sometimes find out what doesn't work, and what doesn't work is going in under asking price if they're priced correctly. And so you may have to go through the process a few times of putting an offer, getting rejected, and then you're devastated, and you try it again, and eventually it goes through and the right fit for the right people. It's so it's just, again, taking the time to stay with the whole process. And then, when you find something, is making an offer, and then your realtor will talk you through it as well, show you comps and show you the market, show you the reason why you should be offering above asking. You know what I mean? So there's a lot of information in the computer that they can show you. It's the market, and it's not that they're trying to take all your money out of you, but it's the way to get a home. If you have to pay, if it's priced too high, you don't have to pay over. If it's really priced ridiculous, your broker is going to tell you that.
Yeah.
There's no need to, you don't have to go in top dollar for everything that's out there. But if it's a certain location and other people, it's a first time buyer price range is tough right now because a lot of people are trying to get out of paying rents because rents are crazy. So, you know, you may be in competition with a lot of other people, but again, lots of comps will help and get a lot of information, get as much information, be knowledgeable yourself, but also expect your broker to be able to help you through the whole process. And so a home inspection, it's very hard. You hear it a lot. People are waiving home inspections, they're waiving mortgage contingencies, they're waiving mortgage appraisals. It's hard. You don't, I mean, that's just the market right now, but you don't have to. You're entitled to a home inspection, but if you feel you're not going to get one, if you bring a contractor, ask your broker to know a contractor, maybe pay out of pocket for not a home inspection, but somebody to come out and make sure they know what the house is all about. You know, so that way you're comfortable waiving the home inspection if you have to. They're expensive too. Home inspections are, I'm not sure, probably $600-700 at the moment. So you really need to know, I want to pay this money because I may lose it if I may lose the house if I waive it, but I really want to get a home inspection because I know. But there's the other option is finding a good contractor that will come with you. And I know we have people that we ask, just can you check this out for somebody, and it makes them feel a bit more comfortable. It's a lot. It's kind of daunting to waive a home inspection, especially on a property that needs some work. So don't feel you have to waive the inspection, but know your options. And then the home appraisal. So even if you waive a mortgage appraisal, the bank are going to do an appraisal in any case. So they're going to have to still come out. But if you waive your appraisal, you have to make up the difference. If it appraises a lot lower than you're paying, and you're after waiving your appraisal, you're going to have to make up the difference. So make sure you're very clear on.
What do you mean make up the difference? You make a
If you
difference
so the difference of what you're paying for it and the difference of where the appraisal came in. So in a market that's as competitive as this, and that people are going way over, say a house for 500,000. If you pay 550, the house is on the market for 500. You pay 550, and the appraisal comes in at 475.
so you overpay, but you still have to pay because you bid.
Because you waived the
you
appraisal.
waived.
That's yeah.
Oh, okay.
So you hear people are waiving everything. They're waiving their mortgage contingency, they're waiving their home inspection, they're waiving their. So just know the facts of what you're doing. If you decide to waive the appraisal, there's a little risk. So
So can I ask you, so if you waive the appraisal and the owner is selling it for that price anyway, does that, they necessarily wouldn't change their price if they want 550, they want 550?
not
Would that
necessarily.
make a
No, if they were
difference?
asking 500 and you decided you wanted to pay 550, I want this house. I'm going to go over. I'm going to give it my best shot. I'm going to waive my inspection, my appraisal, my mortgage contingency, and the appraisal comes in low. You know.
Right, that's what I'm saying. Before you say you can have an appraisal,
Yeah.
before you even put any money down or agree to anything.
Yeah.
The appraisal's 475.
Yeah.
But they're selling it for 550. Will that change their mind?
If you waive the appraisal, it's on you. If you don't waive the appraisal,
I can go back and tell them that I got it appraised.
yeah, and sometimes it's the seller will have to pay, or you come up with a difference, or you know what I mean. But you can walk if the appraisal doesn't, because a lot of times if you're not waiving the appraisal, you can write into your offer, subject to the house appraising for selling price or higher.
Okay.
So there's a couple of ways to try and protect yourself.
Right. Okay.
Yeah, so it's hard, you know, especially the way things are going so high. You know, where's the value? And the appraisers are having a hard time keeping up with everything right now. You know, so I think maybe in the summer it might be easier when there's more and more spring sales for higher prices for them, that they have more prompts to choose from. But it's hard. It's hard for. Yeah. So that's that would be the risk of waiving your appraisal. So, and not everybody is comfortable doing it. Some people don't mind if they have the money and they're like, okay, I want the house anyway. Yeah, but especially for first time buyers, it's hard because you're trying to come up with every penny to get into the market, you know, so, yeah, so. And so then your mortgage commitment is, that's when you have an offer and you're after having your appraisal and you're waiting for your mortgage commitment to come in, and that tells you you have your loan, they've cleared you and you're ready to go. So that's a big, so the dates are really important with every offer you put in. The dates are really important, that you allow enough time, you know, to get your mortgage commitment, so that you're not, you know, even for the mortgage brokers, it's important that everybody is on the same page. It's usually maybe 45, 60 days to a closing, you know, give or take, from time of offer, accepted offer, to closing. So the commitment date is really, really important in that. Allow yourself time for the bank to do their work. So normally, we say from sign of purchase and sales, maybe you could, I would say a month, maybe, for your commitment date at least. And then it's normally a few weeks after that to close. And then you have to obtain insurance. So we talk, you know, to get your homeowner's insurance, very important, get your homeowner's policy. Sometimes you might have to have a flood insurance policy. So there's a couple of things to take into consideration, and it's good to shop around to, you know, just find the best thing, but you will have to have that before you close, so you can get an insurance binder. And pretty much that's about it. You're after, you know, you have your attorney, you have been onto your mortgage brokers, a lot of stuff that goes on behind the scenes, but.
And can I ask you a question, like, when you're talking with someone who's selling something, do you have the right as the consumer to ask questions like, you know, who's gonna take care of the last water read? Did you, you know, the bill?
That your broker
A
will.
sewer lateral that may, you know, like a sewer lateral that may have a problem, it has to be repaired, is it broken? Is it sewer issue? Like, do you have a right to?
You have a right to, yeah. Usually your broker will try and find out all that.
Oh,
because
the
especially,
broker will do all that.
yeah, the
Oh, that's
attorneys,
good.
I mean, the attorneys will clear title and make sure everything is
Make
in
sure.
order before you close.
Right,
Yeah,
and then that way you know when you're stepping
yeah,
into.
you're not assuming somebody else's debt,
Okay, oh,
Yeah.
that's, okay.
Yeah.
Yeah.
but it's usually, you know, so yeah, they'd have to have a final water, they have to have all of that stuff before closing, and smoke and carbon monoxide detectors have to be in working order. So there's a few, you know, there's definitely stuff on the seller's end that they have to take care of in order for the house to be ready to close.
Okay.
And then the rest is history. Get your champagne, your moving truck, and enjoy homeownership. So congratulations, guys, for being here. Do you have any questions that you can think of?
Thinking about whether it's leaving soon or the when should be an option with the market.
It's hard to, I mean, people will tell you through the years, there's no really, it's hard to know when a right time is, because people that bought last year thought they were overpaying and now they're laughing because they have equity. You know what I mean? So it's hard, but I would think it's always worth just keeping an eye on, just getting organized, whether you're ready to buy or not, just do some groundwork and get started. Don't be intimidated. You know, so it's hard to know how it's going to be. The interest rates are going up. If more inventory opens up, then maybe, you know, may slow down the pace a little. But get started. I think it's a good idea. Anybody else have any questions? Do you guys understand me?
Yes,
All right, thanks so
I
much.
just have one
Yeah.
question. Do the rules apply the same as if you're buying a single family or two family?
Say,
Everything, you have to get everything, nothing extra for two, like a.
no,
if you
no.
wanna-
Just gonna be borrowing more money.
Yeah, hopefully you get approved,
Yeah,
because that's an investment, like it's an investment.
it's an investment, but it's still the same, whole same process.
Okay.
Yeah.
That's good.
Same process for a condo, you know, same process. You won't, unless you're buying commercial, And that's sort of the same process, but just a little different. But I hand that over to these guys.
Okay, thank you.
So,
Thank you, Angela.
you're welcome.
All right, guys, just a reminder for the folks on Zoom, this whole presentation will be recorded and the folks in the room. This whole presentation will be recorded. So if anybody wants me to send it, if there's something you missed while we're going through it live, I'll gladly do that. And any questions that you guys feed into the chat, we'll make sure those go to the appropriate people too. And we'll make sure all questions get answered, whether it's here today or in the next few days, okay? So next up, we have our Vice President of Lending, Bob McCauley, who will go through the mortgage process. Bob, would you mind just sign over a little? I think I'm having a little bit of trouble hearing on here.
Okay,
Good to go.
okay. So before I get started, just a couple things about the credit union as a whole. The credit union, one question I always get is, no, you don't have to be a city employee, you know, it's a City of Boston credit union. Anybody who lives or works in Suffolk County, Norfolk County, Middlesex County, which is basically the greater Boston area, can be in the credit union and is eligible for all our services, obviously including mortgages. So one of the purposes we have these forums is because the most common question I get from first-time home buyers is, I'm ready to buy a house, I think, but where do I start? Well, this is one of the places you start, just getting some general information about the process. And one thing about first-time home buyers, it's a daunting process, but you do have one advantage. The first-time home buyer is, in the industry, everybody's friend. And what I basically mean by that is a first-time home buyer is the one person who kind of sets everything off. When you think about it, if you're buying a house from somebody, that person is selling their house and then generally buying another house from somebody who's selling their house and buying another house. And it's a whole chain of transactions. And if one person all of a sudden, for whatever reason, doesn't follow through with their transaction, then the whole thing grinds to a halt. The one person who's not doing that is the first-time home buyer. They're just buying. They don't have anything behind them that's contingent on anything. And so the traditional or the legal definition of a first-time home buyer, at least in the industry in this state, is you haven't owned a house in 3 years. So if you had a long time ago, sold it for whatever reason, disposed of the house, but now have not been homeowner for 3 years, you're back to becoming a first-time home buyer. So some people think, oh, I don't get all these advantages now. A long time ago, I briefly owned a house and then I had to sell it. And the thing about that is there are a lot of special programs that lenders have for first-time home buyers. And one of the reasons why that is because lenders were very highly regulated by the state and federal government. We're basically monitored to make sure we're lending in a fair and equitable manner and in meeting the needs of our community, particularly people of middle income, modest means who are trying to do things like buy a house. And so by making loans to first-time homebuyers, it's frankly a very good business decision for us. I mean, we bring in a lot of new members to the credit union just on the basis of the first point of contact they have with us is getting a mortgage. And when you have a mortgage, you're gonna have somebody who's a member 30 years. So that's why I say it's good business for us. It's a good deal for the consumers. Now, just to go over the process, one person in the audience had a question about the timeline. And the first place to start is gathering information. You know, where do you want to live? What kind of house do you want to live? I mean, somebody mentioned a 2-family. Some people may prefer a condo style of lifestyle. It's all up to you, because there are certain things you have to realize. If it's a 2-family or 3-family, you might have to put a little more money down, even without the first-time homebuyer programs that are out there. So just keep that in mind. You also might have to do a little more work to ensure, like the property, since you're going to be renting to somebody else, to be worried about things about like lead paint. If it's an older property, be careful about things like asbestos. Because when you're doing multifamilies, you're not only getting a house for you, you're starting a little business.
Mm-hmm.
So once you decide that, the next step is to get pre-qualified. Why do you do that? It's not just to see where you are. It's also to let everybody else in the process know who you are as far as what you're looking for. I mean, you will find out, like I say, okay, you can afford a house in X dollar range based on what they pre-approve you for a mortgage loan and how much assets you have to put down on the transaction. Let's just say the lender tells you you would get approved for a mortgage of approximately $400,000, and you have maybe $20,000 to put down on the down payment. So that tells you right there, your target range for a price is around $420,000. Now, these are estimates because there's certain assumptions you have to make about property taxes that go into your payment. If it's a two-family, for instance, we're making certain assumptions with rents. And if you go from city to city or neighborhood to neighborhood, things like taxes and rents can greatly vary. So just bear that in mind. When you get pre-approved or pre-qualified, it is just that, it's an estimate. So when you find now the next step is you're looking for a house. Now, when you find a house, you put down an offer, and let's take the optimistic side, and then your offer is accepted. I mean, there's a very simple document signed. It's the offer to purchase. It's like a 1 or 2 page document that holds the house there. I mean, it's not the purchase and sale, which gets negotiated over time, probably over the next week or so. But it at least sort of holds the house for you when you start. Then you start to get serious about the purchase and the borrowing process. Because during that time that they negotiate the formal purchase and sale, that is when, if you so choose, and if it's allowed under the terms of your agreement, to have a home inspection. And just to reiterate what Angela said here, everything's negotiable. You don't have to have it. I mean, we as a lender don't require it. Myself as a professional thinks if any way you can have one done, please do. I mean, I speak from personal experience. When we bought our house, the home inspector told us one thing had nothing to do with the safety of the house, the durability, the value of the house. He just basically said, well, have this little valve replaced on your oil burner, and you'll save 25% on your oil. And if you see the price of oil these days, that was a very good investment. So, I mean, when you sign what the purchase and sale, the actual document determines, that's when they set the cold hard numbers of the transaction. I mean, you'll say the purchase price, it will say you agree to apply for a specific mortgage within a certain period of time. I mean, so there's 3 key dates in there. A lot of people, obviously the closing date, and then there's a date which you need a commitment. But there's also a date that a lot of people don't notice as much is the date that you agree to submit a mortgage application by. And that's the first step in the process, because somebody doesn't want saying like you come up to the date when you have to get a mortgage commitment. Now, I can't get my mortgage commitment in time. I guess I got to back out of the deal and exercise my rights under the contingency clause. Well, when did you apply for the mortgage? Oh, 2 days ago. That's not going to fly, because it generally, speaking from my point of view, from when you apply to a mortgage commitment, 2 to 3 weeks is probably about right. We can do it quicker if we need to, but 2 to 3 weeks is a reasonable timeline, given all of the factors. The main point, key point in the commitment process at this point, because they've already done the pre-qualification work on you. You've already applied, and so the credit stuff is all out of the way at this point. The main thing is the real estate appraisal. I mean, like Angela alluded to, the situation with people overbidding, bidding above the asking price. What happens when the appraisal comes in lower than the new agreed to sales price? Well, a couple of things can happen. You can try to renegotiate, but that doesn't generally get you much this way. Or you can come up somehow out of pocket, or I could say, depending on how you drafted your purchase and sale, to give you a good contingency clause, you can basically say, I can't get a mortgage for that amount, because the bank is only going to lend based on that appraised value. I mean, the key thing is the banks have, and it's a lending, it's not our rule, it's kind of industry standard over decades. Lendable market value is defined as the lower of the agreed purchase price or the appraised value. So I'll give you 3 scenarios, okay? Let's just say that the listing price, you bid on 500,000, you agreed on fine. Okay, and then your appraisal comes in at 500,000. That's the normal thing that happens, and everybody's happy with that. So let's say now you bid 525, but you want this house. It still comes in at 500. That's all your lender is gonna base their loan amount. So if they're gonna lend you up to like 95% of the thing, which they will do for first time homebuyer or even more, you have to come up with, they're only gonna lend 95% of 500,000, which would be 475. But you don't have to come up with the other 25. You have to come up with 25 plus the other 25 that you overbid for. So that's one thing to consider. Unfortunately, let's just say that case when you agreed on 500,000 and the appraisal came in at 525. Well, you got a good deal on yourself, but you can't ask the lender to say, hey, can you give me an extra 10,000 because it's really worth more? No, they have to go with the appraisal. So that's the key point. Once the appraisal comes back, that is when the banks will issue your commitment letter. And at that point, you're pretty well set. I mean, the attorneys are doing their title work towards the closing, but at that point, you should start to feel comfortable that it's going to happen. Now, there may be a few glitches along the way. Then the closing gets moved around a day or two because of people's personal situations. But the commitment date is the key thing. And it's like one thing you can always do is to stay organized. And to do that, one thing that's really important is documentation. They're going to ask you for everything. I mean, you think that Donald Trump gets audited, you're going to get really audited and get a loan. Tax returns, pay stubs, bank statements, if you have retirement accounts, all of that. What I tell people when they ask me, what can I do now, even when I'm not ready? Copy everything. And if you have access to scan it onto your home computer so that when you're ready, it's there. You can just send the file along with your application. I mean, nobody likes it when you have to start digging around for, oh, where did I put my 2019 tax returns? I'm not sure I know where I put my 2019 tax returns.
How many years back did they actually?
Generally two.
Just two?
Good question too. I mean, 2
So
years.
could you give them three? Just
Oh, you
good,
can't.
better?
It's really not necessary unless there is a particular thing, like, let's just say you change. This is an excellent question. Actually, it's the first time it's been asked in that way, but if you change jobs but within the same field and you want to document that prior work experience, I think showing the extra, particularly in this COVID environment that we had, with particularly 2020 is such an outlier year, given an extra year might well be a very good thing for a lender. In case if it's a real marginal thing where you're a little bit above the ratios, but you got a good credit history and you're really dogged about what you're doing, you know what you're doing, to see the overall trend. And because lenders don't make money by not making loans. Let me tell you that. I mean, nobody wants to spend like weeks on a loan and then not happen. I mean, we all make money when we make loans. I mean, when you turn these to a closing, they get their fees. When a real estate agent satisfies their client and what they've been contracted, then they get their compensation. Nobody wins when nothing happens. So when you're applying for the loan, you'll hear a lot about underwriting ratios and standards. And these things are guidelines for the most part. These things are not laws. They're not regulations. They're not carved in stone. You can be over on certain things if you have what you call compensating factors. If your debt ratio is a little high, but let's just say you've been renting in a place that you have a very high rent, and your mortgage payment really isn't going to change much. That's what I call a compensating factor, and that shows you that you're a responsible person with your financial affairs, and you can handle that kind of thing. If you have a very high credit score, they're going to overlook maybe a little high debt ratio. Conversely, if you have a middling credit score, if you have a good explanation for it, and you know what, dog ate my homework isn't an explanation. I mean, just be honest with you. We've heard it all. I mean, you're just basically saying, no, the best explanation is I forgot to make a payment. I've done it myself, so I put stuff online. I mean, most times they're not going to yell and scream at you and call you a bad person.
I was stuck because COVID is another island and I couldn't make my payment.
Well, that's fair. I mean, people had their travel things. People got stuck in places. I mean, people had to when the government had the extended unemployment where people were getting and signing up for it. I mean, the COVID thing, curiously, is going to give a lot of people sort of a rationale for things that happen. And it's, as they say, if you do it, it's the most, when you get the credit, the most important credit
Mhm.
is your most recent credit. And one of the thing about that is that the worst thing in the world not to pay is a car loan. Let me tell you that right now. It's actually
No,
worse
they
than a
always say
mortgage.
that.
Well, because two things, like it's a lot harder to foreclose on a house than it is to repossess a car. So, I mean, you miss a couple car payments and your car could be on the tow truck before you know it. So, so people realize that if you're not paying your car, that's sort of the last domino because you can't get to work.
No.
But one of the things, just to go back to the application process, all during the process, they're going to be giving you disclosures. I mean, to show you how much you're going to be paying, how much you're going to have in fees, and like over time, what your payment should be. I mean, those are the things to kind of look at before you sign, because you can see a great rate that's posted, but when you look at the fine print, oh, what's this thing? Origination fee, or what's this like processing fee? I mean, one thing about the credit union, I mean, I'd say our rates are competitive. They're not the highest, they're not the lowest, but we pride ourselves in not gouging our members for fees. I mean, we don't have an underwriting fee, a processing fee. We don't have origination fees, applications, any of that. So, I mean, the fees that you pay to us at the closing and through the process all go to third parties. There's a fee that goes to the credit bureau for the credit report, to the appraiser for his appraisal report, and for the lawyers for the closing. I mean, there's certain recording fees that go to the state to record the mortgage and all that. I mean, we basically make money when the loan is made and we start charging you interest, and that's good enough.
I'm sorry, can you repeat what you said, that the credit union doesn't have
Okay, fees.
origination
Okay, fees. Okay,
closing
yes,
fees?
sure. There's a number of fees. Whoever you go to, you'll get disclosure of fees. Initially, there's one that right after you apply, they're required to give you. It's called a loan estimate, and it'll show you your payment amount, your estimated payment amount, your interest rate, and all of the estimated fees. And some of those fees are like a loan origination fee.
Mhm.
Some of them have an application fee, an underwriting fee, and a processing fee. Not everybody has all these fees, but some of those are common fees you might see when dealing with various lenders. And there's absolutely nothing wrong with them. Sometimes they might give you a little better rate and charge you more fees. That's just their way of doing business. There's nothing wrong with it. It's just, we just offer, we've kind of gone the way of offer competitive rates and not gone the way of fees.
Okay.
So that's the thing to look at as far as that. So the other disclosure comes 3 days prior to closing that they have to give it to you, and that's called the final disclosure and closing disclosure. And that will tell you that has the hard numbers. That's it. This is what your rate will be. This is what your payment will be. Oh, and this is the amount of money you have to bring to the closing. Because believe it or not, people like come to the closing and they're kind of like, I know you put a $15,000 deposit with your realtor here, but your other part of the down payment, your closing costs, you have to bring that with you. And sometimes we've had people call us up, hey, can you wire some money to Katie's office for the closing? I mean, you've had it happen, I'm sure. So that's the thing there that that's why we're required 3 business days prior to closing at least to say this is what you need to have. So now, just a couple go over a couple questions that people always ask, and some of these, like Katie, and we'll go over and so on. But do you need your own lawyer? Okay, the credit union assigns a title agent to do the title work and closing. That firm represents the credit union as lender. It is a charge you incur. It's just the way it works. I mean, I would say 99% of the people who are buying a house these days engage the services of their own attorney. Not required, extremely recommended, because let's face it, you're doing a $400,000 transaction at a minimum these days. So I mean, that's there are attorneys out there. Their fees are what their fees are. I mean, sometimes they'll help you looking at purchase and sale agreements, reviewing disclosures. They don't always as much come to closings, but they can. It's up to them. It's all negotiable. Do you need to take a first-time homebuyer education course? Well, we don't require that, but but it's a good idea. And you learn some other things. You also find out some interesting resources depending on what communities you're in. Like the city of Boston has a lot of, if you're looking to buy in the city through its Boston Home Center has a lot of resources. And they have programs that offer financial assistance if you're a city resident buying in the city. And one of the requirements for those programs are taking one of those courses. I mean, and the Boston Home Center can tell you where you can find those particular courses. Some of them can be taken online too, so you don't have to make time out of your busy schedule. Okay, credit scores. I mean, it's alluded to earlier. Don't be a credit score junkie, like worrying about, like I say, if you run a red light, your credit score's going down 2 points. I mean, but here's the thing, you know, keep your credit card balances below 50% if you can do 30. So if you have a couple credit cards, don't put it all on one credit card, kind of spread it out. That's one thing. Obviously, make your payments on time. Biggest fallacy, don't pull my credit because my score is going to go down. Yeah, it might 2 points, but you know, it'll come back after a few weeks. So don't worry about that. The only case where that's valid is if you're in a situation where it's a really marginal score at present because of some past things you have to go through, then you might want to limit that, because generally speaking, 660 is a real good score to start with most people. You can get pretty conventional financing. You might pay a little more in rates these days. Some of the first-time homebuyer programs, like the city does, that we partner with them, they'll go as low as 640. The problem is like I say, you can go as low as 620, but you're going to pay both in terms of the rate, higher rate, and higher costs generally for private mortgage insurance. Couple other questions. I mean, debt to income ratios, as I said earlier, I mean, low 40s is kind of the sweet spot you don't want to go over. I mean, you can sometimes, if you have a really strong credit score, depending on your down payment, but that's kind of a target range to be in. Now, one question, my application was denied. Is that it? No. First thing they have to, if your application is denied, they're gonna have to give you a formal notice in writing of the denial and some reason why. Was it credit, excessive debts, and so on. So then talk to your lender, because once again, as I said, they got no juice out of that having to turn your loan down. They're making nothing. They just basically spent all the time in the application. It didn't happen. They can tell you, like, maybe, okay, is it you're going too high on the debt ratio? Do you need a little more time in your job? Or, like I say, maybe you just need to work a little bit more on that credit report. I mean, I would ask them, because a lot of times no really means not yet. And take that attitude. Don't think of no, think of not yet. I mean, that's kind of the thing to do. Now, a lot of people say, well, I'm not ready now. A lot of people could, I'm thinking of buying next year or something like that. What can I do now? One thing I can do is figure out how much maybe estimate you're going to pay on a mortgage. Compare it to, if you're renting, compare it to what you're paying in rent. So let's just say you're paying $1,200 in rent, and you figure your mortgage payment's going to be around $2,000 a month. That's an $800 gap when you do buy, you're going to have to make up. So what you do, treat that as an obligation. Treat savings as an obligation. Start banking that $800 away. Now, number one, you'll get used to it. So the day you walk in your new home and you get your first mortgage bill, it's not going to be a real like cold water in the face kind of shock that you have to suddenly come up with an extra $800 this month. But you'll also start to build up a nice little financial nest egg towards that closing that's coming down. Other things, as they say, I mean, find out your credit profile now, work to improve it if it needs to be done, and then do your research on as far as where you want to live, what kind of houses, so that when all of a sudden, sometimes you may say a year, in 3 months, you just might say something and just kind of go for it, and you know, be ready. Last thing I want to say, and I just added this today because the one dark cloud on this is interest rates. I mean, interest rates in general on the mortgage industry from the low point, which sometime last year, are up a 1.75. So let's just say from about 3% to 4.75%. Most of that increase has happened probably within the last 6 weeks. I mean, 6 to 8 weeks. So I mean, it does affect affordability. I mean, the thing is that everyone hears that the Federal Reserve just started raising interest. Mortgage rates were going up a lot further back before them. It's anticipated. So hopefully our rates are going to kind of plateau before before the Fed keeps jacking up the prime rate every so often and all that. One other thing I neglected to mention is to say, housing lotteries. I mean, this is the one thing how you can sometimes beat the issues of affordable supply. I mean, depending on where you're looking. I speak to Boston because I'm familiar with that, but other towns may do it as well. A lot of times there are developments within the city, and as part of the development approval, the developer agrees to put aside a certain number of the units as designated affordable at below market rates. And they're generally done by, first you have to show, like the city or whoever's running the program, you've been pre-approved, so you're mortgage eligible, and you put your name in a lottery. Coleman and I know somebody who's doing that right now. So this is really happening. I've done a couple within the last 6 months. This really does happen. And as with any lottery, if you don't enter, you can't win. I mean, I'm just saying that. I mean, there's not much else we can do about the price of housing, but that's one thing just to kind of keep an eye on. Now, the thing is that they're what they call deed restricted properties, so that you're buying them under market. So when you turn around and sell them, you're going to sell them under market too, because they want to keep, so the next person who buys it is also in the affordable category as well. But it is a great way, like I say, to get your foot in the door. Now, does anybody have any quick questions? Yes,
They
ma'am?
have like, some stipulations with, even with the first home buyer class, you have to live there at least 10 years before you can resell it.
There's some, every project is unique. They have certain things that it's all negotiated, like how many units. I mean, there are income restrictions based on, you can't make above a certain income based on your household size and the like. There are certain things like they'll give you grants, but you know, you have to pay back the grant if you move within 10 years, things. I've seen the 10-year rule.
Right.
I mean, some of the things like that, as far as the resale, normally on the resale, what I've seen is every year, let's just say the market value of a place is 500,000 and they sell it cheap below market at 300. They generally build in, and it's called it's a restriction on the deed. Like every year you can get like say 5% appreciation, so that if so many years down the road you decide to move into a bigger place, you sell it. You don't have to sell it back for the 300,000. You might get to sell it on the market for say like 330,000. So you'll make some appreciation for being there based on how long you've been there, but you're never gonna like, it's not gonna be like winning a true lottery, like being able to get that 200,000 discount.
Right.
But
And another thing,
yes.
when these certain programs, they always, I know they're saying low income,
right,
but I'm right on the borderline. Like
right.
I made $2 too more
Yeah.
to qualify. I
Right.
mean, $2
I've
extra.
had this conversation.
And it's like the middle class, which is none no more.
Yes.
It's either you're dirt poor or you're real rich. Because they have iced us out of everything. Even when the pandemic was
Right.
going on with the RAF program, there was a lot of people I was paying triple the amount of rent, going to work every day because I was an essential employee.
Right.
And they were sitting home. They was in Miami buying their boyfriend's dirt bikes. Their rent was $200. And then they turn around and say F the rent, and they ran to RAF and RAF bailed them out. Here I come, working through snowstorms, the whole nine. My taxes paying for
And can't get
this
that
person
back.
to eat, go on their trip. I've been at my job for 20 years.
Wow.
I ain't even been in Miami yet. She been 5 times.
Okay.
So, and then when I need a bailout, because I need you know what I'm saying?
Right.
I can't get it. So I don't understand, like, it's really like a catch-22
Yeah,
of
it
these,
is.
all
I
these
have run into
programs.
these people who make a little too much, but then when you look at the market value thing, they don't make enough because the difference.
That's correct.
The one thing I say is every year they adjust the incomes. There's 2 sets of incomes. There's the 80%. Actually, there's 3 levels. 80% of an annual median income for the Boston area. Then it's the 100% income. And there's the 130, which you can get to a certain point. Every year they adjust that ceiling upward. This is the month. I haven't seen the figures, but generally it comes out in April of every year. So April of every year they come out with. So maybe,
Hopefully,
hopefully, and maybe depending on where you are, maybe you're now slightly.
I hope so.
I mean, I had one
That is
person.
frustrating.
Said, "Can I refuse the raise they gave me in January?" I says, "No, you can't." I said, "It's already in your pay stub."
Right, you get to that point though, like,
I understand, and as I say,
yeah, it's
I've heard similar frustrations expressed to me about that, you know, this, I mean, we do, we can, hopefully, I don't know how much it's going up, but it's based on sort of national averages, so.
Okay,
But,
I'll keep an eye on
yeah,
it,
but it's a very good point.
yeah, it's not good.
Good question.
Anybody else have any question? Yes,
Can a lender deny you if, let's say, you said that the ratio, let's say his credit score is like 690, and you have like 5 credit cards, but they're under the, that ratio, can they deny you, say like you have a lot of, like, let's say you have 10 credit cards, too much debt out there, can they?
they generally will, it's based on your overall debt to income ratio. Okay, so it's based on what you've got out there now. I have never heard of a lender saying, okay, you've got 10 credit cards with 0 balances, but theoretically, you could run all of them up to $50,000. I've been doing this longer than I care to admit, but I've never once seen that kind of analysis done as a denial ratio. Once again, I'm gonna go back to kind of the point on denials, like I say. I mean, most lenders, as they say, I mean, credit union, we kind of work in the traditional model, like we all get paid, like we don't get paid extra to make loans, but basically, so we don't have to brush everything through, even stuff that won't, but a lot of lenders out there, particularly if you deal with a mortgage company, they are commissioned people. And so they're even more incentive to get it through it, get a yes decision versus a no decision. But I've never heard of that. I mean, if you meet their debt ratio, you have a credit score, I mean, they're looking to say yes, because frankly, when they say no, not only do they have to send you out a formal notice, I mean, part of the notice also says, they have a thing, there's a mortgage review board in Massachusetts, independents made up of like volunteers from the industry, then basically somebody says, I don't think this is the right decision. What will happen is, if somebody appeals to this, and I've seen this happen, the board will come back to the line and say, hey, can you take another look at this? Sometimes what this board will do is they'll still say like, you know, hey, they'll ask one of the people, do you know a bank who might do this loan? I mean, every bank can have their own standards. I mean, a bank can basically say like, you know, like it used to be 28% for housing ratio, 36%. That was kind of standard, but these aren't laws or regulations. These are kind of industry standards. A bank can be as conservative, as liberal as they want to be within certain restrictions. I mean, they can't be too liberal before the regulators say like, you know, you can't basically lend somebody 150% of the house value and like, don't look at the debt ratio. I mean, but within reason, it's just their standards. But the situation you kind of outlined, like I said, I've never seen. I'll get the women back first, and then I'll come back to you, ma'am. Yes.
Earlier you said that the bank lends money based on the appraisal value.
Yes.
What happens if you waive the appraisal? How does the bank determine how much?
Okay, so you're waiving the right to get out of it if the appraisal comes. You're not technically waived. The bank requires an appraisal.
Got it.
You're waiving the right to get out of it if the appraisal comes back not to your life. That's what you're really doing. Waiving the appraisal is sort of shorthand, but the bank requires an appraisal.
Got it. Okay.
Yeah.
Thank you.
Foreclosure properties or
Yes.
city-owned properties, how do you get the information about those certain properties?
Okay.
The fixer-uppers or
Okay.
whatever.
Okay, foreclosures, basically, every now and then I get a call from the public. Do you have any foreclosure properties in inventory? We don't, but that's how people find out. Some people will look at the legal notices in the paper. If there's gonna be, it has to be posted. If it's gonna be a foreclosure sale, basically anybody, given the appreciation and values of it, you don't see a heck of a lot of those these days, just because most people will, even if circumstances have totally like ruined them financially, might at least be able to somehow sell this thing and get out from under it with a little walking away cash, rather than what happened like during like the Great Recession when things were underwater and, you know, things went to foreclosure because there was no equity. But if you have that case, I mean, you see when there's an auction, I mean, anybody, it says generally speaking, like you show up at the auction, generally you have to have like a cashier bank check, like 5,000 to 10,000 to bid, and you can put a bid. Now, if most case, in times past, when there were actually foreclosure auctions that went that way, most times the bank ended up owning the property, nobody bid enough. And then some people have a strategy, they won't bid then they'll call up the bank, hey, I see you just got a foreclosure. Can we do it? Because normally what happens in those auctions is the $10,000 you walked in, if that's your little deposit, you generally then have 30 days to come up with the balance of whatever you bid. And so, so then you're left scrambling to basically get a mortgage in 30 days, which can be done. But part of the one caveat about foreclosures is the sale is normally conducted on the grounds of the property outside.
Yeah.
You have no idea what's inside. I mean, I've seen some, and heard some horror stories, like a certain bank known by its initials, like the big snake that kind of chokes you, say no more. They foreclosed on somebody when the people finally got in there. There were all sorts of graffiti put like believe BOA and all that. So I mean, you don't know what you're getting. So you better have a big budget for renovations if you're going to go down that route. So as far as city-owned properties, you can call the city and they'll direct you to whatever entity. I'm not exactly sure what entity actually manages them, but those probably are even in worse shape. But everybody's got to start somewhere. But that's because of the market. You're probably in this part of cycle of the market are going to find that kind of thing. But look in the newspaper, you might see one that somebody for whatever reason, like somebody died and nobody's managing their affairs and it just went to foreclosure almost by default. You might find something, but it's just another avenue to just keep your eyes open, I guess.
Right.
Okay.
Bob, I'm going to jump in real quick.
Okay, sure.
Once again, guys, just for the sake of time, if we have some further questions for Bob in particular, you can definitely fill out one of these forms and give it to me and we'll make sure everybody follows up. But just to kind of keep it moving, we're going to call up Katie to go through the closing attorney process.
Hi, I'm Katie Frazier with Dalton Finegold.
Hello.
And I'm a residential real estate attorney. We have offices Boston, Andover, Concord, Marlborough, and all over the place, as well as New Hampshire. I am going to be a bit repetitive because I think education in this market is the most helpful thing in moving forward. And so repeating some of the things you've already heard, I think is just going to help you understand what we're talking about just a little bit better. And I think it's going to help go back to your question about how do I know when it's a good time to purchase. The more educated you are on the market and the process, you're going to know when it's the right time for you. And one of the first things I would recommend is getting a good team behind you. So Bob and Angela have already talked about, the agent side and the lender side. There's nothing more important in this market than having an agent that you can talk with and that you trust to guide you through the process, who knows the market you're looking in, who knows foreclosures if that's what you're interested in, because they will guide you through the process, especially with some of the nuances going on in today's market. And also having a lender that you can pick up the phone and call, shoot an email to, know you're going to get a straight answer from. There's nothing more helpful than that in this market. And just to explain a little bit of the process, as far as a buyer, you may be concerned with what's it going to cost me to have an agent assist me through this process. The way that it works in Massachusetts is that there's a listing agreement between the seller and their agent for a certain commission based on the purchase price of the property. That commission is then split with the buyer's agent. So the funds aren't actually coming out of your pocket. It's really being paid by the seller at the time of closing. So it's only a benefit to you to have a buyer's agent on your side. And so that's just one thing to keep in mind while you go through the process. So step one is absolutely what they've talked about, is getting that first pre-approval, finding your lender, because when you go to submit an offer, what has to be attached to that offer is your pre-approval letter saying, City of Boston Credit Union says that I am good for X amount. And the offer is going to set forth the purchase price you're willing to pay, the deposits that you're going to put down, and there's 2 deposits in Massachusetts. One deposit that comes at the time that the offer is submitted. So that is what the offer deposit, what that ranges at depends, but it's, anywhere from 500 to 5,000, depending on the market that you're in and the competitiveness. But there is a second deposit that comes at the time of what's called the purchase and sale agreement. And that is a larger deposit. Again, it ranges on what that amount's going to be, and your agent will be able to guide you through that. The offer is also going to set forth contingencies, and we've gone back and forth about using words like waiving appraisals and that kind of thing. So I just want to talk about what is a contingency? What does that even mean? When you submit your offer, there are a few different types of contingencies. There are mortgage contingencies, inspection contingencies, home sale contingencies. And what those are saying is, if this doesn't happen, I can't purchase. So it's protecting you. And well, what is it protecting? It's allowing you to be able to get out of an agreement and have those deposits that I just talked about returned to you. So you're saying, yes, I want to buy your property, but I can only buy your property if City of Boston Credit Union says I'm good to go. And if I don't have that, then I can't purchase. So that commitment date that was referenced before is going to be in your offer. And you're saying, I can give you a financing commitment 30 days from today. So if you're not able to get a financing commitment 30 days from today, say something comes up on, the lender checks, something happened with your credit score, or the appraisal comes in very low, you say to the seller, sorry, I'm not able to move forward. I've been denied my financing. I want my deposit back now.
So, but you gotta put that in writing.
That's in your offer, exactly.
Yeah,
So
that
these
if
are-
in case I don't get my loan or on time or,
exactly.
but it only has to be if you don't get your loan. If anything else, say you lose your job.
So then you'd be denied financing.
Okay.
Yeah, that's just a reason that you've been denied. And as long as you submit that termination on or before that financing commitment date that's set forth in your offer and then moved into the purchase and sale agreement, that's what's protecting you. Inspections, that's another contingency. That'll be part of your offer. You're saying, I'm submitting this offer with an inspection. I do want an inspection and I'll get it done within 7 days. If you get that inspection and you're like, ooh, there's too much here, I'm not taking this on,
Yeah.
you have to notify the seller on or before that 7th date expires. Again, that gives you back your first deposit.
So it has to be within 7 days?
Whatever the terms of your
Yeah,
offer
yeah,
are.
inspection. Oh, you gotta
It's
write
whatever
it in.
your offer. Yeah, you work with your agent who's gonna guide you through the best way to submit this offer. So, and this is
10 days. So 10.
whatever they're able, if you can get one.
If you can get an
So that's,
inspection, that's
yeah.
what I'm saying.
And
So
that's the
it
thing is,
takes longer.
And that goes back to what I'm saying at the beginning of getting an agent that you're comfortable with, that can explain to you in this market, this is what's standard, this is what's not gonna work here. Because then they'll guide you through the best way to submit that offer so you can be as competitive as possible.
Okay.
The other contingency that happens quite often is home sale contingency. So this isn't so much for a first-time home buyer, but we're actually seeing it a lot also on the seller side. Sellers saying, I want to sell you this property, but only if I can find some place to go. That's our biggest, one of our biggest issues in this climate right now, and I think it's causing a lot of the problems, is we have so many sellers that would like to sell because they see, oh, high prices, but they're afraid they're not going to find a place to go.
Yeah, they're
So-
not being afford to buy something.
You wouldn't be surprised in this market if you see the seller was willing to accept your offer if you have language. What they say is subject to seller finding suitable housing is what they often do. So that's another contingency. They're saying, I'd like to move forward, but only if and when this happens. So once your offer is submitted and accepted, the next step is to start, and this is where I've come in. So in Massachusetts, like they mentioned before, you are required to have an attorney close the loan on behalf of a lender. They also can be the same person that represents you. So a lender attorney and a buyer attorney can be the same person because they represent the same interests to a point and extended for a buyer representation. So one of the biggest questions to ask an attorney when you're looking around for someone to assist you is, are they on your lender's approved list of closing attorneys? Because in the best way, well, it's a personal preference, but to be able to have an attorney that you trust close it is helpful because you're not incurring an additional attorney fee, because you'll have to pay, no matter what, you have to pay for that attorney's fee who's settling it, closing attorney. And if you want an additional attorney on top of that, there's an additional fee on top of that. So if you can find an attorney that's able to close the loan that you're also very comfortable working with, that's best case scenario, because they can walk you through beginning to end. I used to only come into the picture really at purchase and sale when we have an accepted offer, we've gone through inspection, we're ready for you to just draft this document. But what I'm seeing a lot of now is terms are a little trickier in offers that are being accepted. So I'm brought in a little bit earlier to talk about, okay, well, they've asked me to waive appraisal. I understand from my agent and my lender, but can you talk me through legally what happens in the contract if I do that? And you're able to just get, the more information you can get from your team, the better. You'll be, because the other part of this that we haven't really mentioned is how quickly you have to move. I know, correct me if I'm wrong, but we're seeing properties come on the market on Thursday with offer deadlines for Sunday or Monday. So you get 10 minutes in the property and now you need to submit an offer and move very quickly. So you need to be educated so that if you're being told you have a day to decide to waive an inspection or not, you need to be able to feel comfortable making that decision. And the more comfortable you feel making that decision, you'll be able to make them quicker. So the purchase and sale agreement is everything that's in the offer, then a bit more detail. So it's going to set out the deposits that are being put down, purchase price, closing date, any items that the seller is leaving in the property. It's also going to set certain standards that the seller has to meet. Not only like, does the property need to be provided in broom clean condition with nobody living there, no property left behind, but also standards as far as the title. I mean, you mentioned this earlier, to make sure that the sellers are passing good, clean title to you. So the purchase and sale agreement will cover, and I believe it says, all of the contingencies that we've talked about as well. So if you have any contingencies for financing, your mortgage contingency will be in the purchase and sale. If you've decided that you're okay waiving appraisal, or what we've seen a lot of in the last year is not full appraisal waivers, but saying, if the appraisal comes in 10 below, I can make up that difference. If the appraisal comes in 5 below, I can make up that difference. So it's not giving the seller the whole thing, but saying, you know what, I can give a little bit. This is what my window looks like. But then again, that's something you have to talk with your lender about, because you need to know what financially you are able to do. Because once you've said, I can make up 5,000, then your deposit will be at risk if you try to terminate based on that reason. So it's really talking to your lender about what you are not only financially qualified to do, but what you're comfortable doing as well. So it's, yeah, you might be able to buy a $400,000 house, but what does that look like monthly? What's your payment? That kind of thing. When talking to attorneys, not only do you want to find out if they are able to close on behalf of your lender, but ask them about what their fees are. Attorneys will bill differently. Some attorneys will charge you to do the purchase and sale agreement and then charge to close. Some will do a flat fee. So ask what fees are included when they quote you what the amount will be. Ask if your title exam is included as part of that or if it's separate. And a title exam is what it allows us to go back 50 years or more to make sure that the seller has good, clean title. We review the title of the property and make sure that everything has been passed the way that it should, and that there aren't any issues, so that when you take ownership, you are the true owner and there are no issues for you. Let's see. We also at that time are looking to see all of the mortgages that are on title, because we want to make sure that everything is paid off at the time of closing. So if the current homeowner has a mortgage and a home equity line of credit, we're going to make sure that's paid at closing. If the homeowner hasn't paid taxes in a couple of years, we're going to make sure that's paid at closing. We check final water, we order from the town, make sure that final water, final sewer. Some areas do trash as well. We make sure that that's all paid. Some cities pay town electric. We make sure any of those final bills are paid through closing so that it will not be connected to you when you take on the property.
What happens to a lien on that house?
It has to
They
be
don't
paid.
know. So who the sellers has to pay that?
Yes,
It
it's
doesn't
taken
come
from
out.
their proceeds at the time of closing. And if their proceeds do not cover that, then that's a pretty large title issue that you're going to want to walk away from. So typically what happens is if there's a lien on the property, you notify, if the seller has an attorney, you notify their attorney, we get a payoff statement, and that is paid at closing. And then whoever the lien is owed to, they send us back a release once the funds are received, and we record that with the Registry of Deeds to confirm everything has been paid. But that's part of the job, is to make sure there are no liens on the property. Talking about different types of properties, and if there's anything that's a little bit different, if you're looking to purchase a condo, another part of the process is getting what's called a 6D certificate. And that confirms that the homeowner doesn't owe anything to the condo association. So at the time of closing, we get a statement saying, seller has paid through the end of the month, whatever month they're closing in, there are no outstanding fees, and there are no future assessments. That's another thing that you might want to get if you're looking at condos. Assessments are something that you're going to want to ask about. There's going to be I shouldn't say always, but most of the time there's a homeowners association and a monthly dues, and you're going to want to ask what's included in that. Water, heat, what are you getting with those monthly association dues? And then are there any upcoming assessments or current assessments? And those can be things like, we just changed the roof. So every condo now has to pay us $100 a month until it's paid off. So typically we try and get those assessments paid off by the current owner. before you take it, but obviously different circumstances, amounts owed, that kind of thing are gonna change per property, but those are good questions to ask if you're looking at condos. Yep.
Does this also work for land?
In what way?
Buying land?
Yeah, absolutely. If you're purchasing land, they're gonna do a title exam and make sure the same thing, if there's any liens on the property, that kind of thing. So you sign purchase and sale, it's sent to your lender, it triggers the process on their end, they order the appraisal to be done, they send to my office the title order to do the title exam. We're moving forward, we get the appraisal back, everything looks good. That financing commitment is the next stage. As soon as we get a financing commitment from your lender saying we're good to go, there's no outstanding conditions that we're concerned about, then you're able to go back into the property again. And we recommend doing it as close to the closing as possible, so night before, morning of, to make sure that the property is in the same condition it was at the time of your inspection. Or if you didn't have an inspection at the time that you submitted your offer. If you did have an inspection and the seller was supposed to make repairs, that's the time we check as well to make sure that those have been made.
What about if the tree fell on it, and storm, storm came, tree fell on, you didn't look at the house, now you bought this house with a big hole
So
in
the
it.
purchase and sale agreement will address that. And it depends on the attorney that you're working with and how it's in the property and that kind of thing. But those types of issues will be addressed. Because if it's, I actually had a closing pretty recently where a tree fell on the house about a week before closing.
Yeah, a few days right before.
But insurance covered it. So it was just a matter of extending out the closing. Insurance fixed the problem and the buyers were able to go back in and make sure the property was structurally sound and that it didn't cause any more severe damage than what was visible. So there are ways to work around it if that does happen.
So the owner still had the insurance, or was it the new owner, the one who's gonna buy it?
So part of purchase and sale agreements confirm that owners have to maintain the insurance presently insured on the property until, so not just the closing, but the deed is recorded at the Registry of Deeds. You do not become the official owner of the property until your deed has been recorded at the Registry of Deeds and accepted by the registry. At that time, you are now the owner.
How long does that take?
It's a great question. So pre-COVID, there were options of signing at the registry and hand filing documents. Typically now everything's being e-recorded. So as soon as you're done signing, and it's the buyer's attorney that handles filing everything at the registry. So as soon as you're done signing and everybody's fully funded, the new deed and mortgage are e-recorded at the Registry of Deeds. So we send it into our system and you get in line. So there's a line, and as soon as, they've had a chance to review your documents and you're accepted, then you're good to go. I've had it take 10 minutes and I've had it take 5 hours, 6 hours. So it depends on, and I'm sure Angela's dealt with this a lot. Timing your closing is very important. Fridays at the end of the month, please don't do that to me. Because that's when everybody closes, because it's really based on leases and renting. It's, okay, well, my rent stops, and if you have the ability to be a bit flexible on your closing date, stay away from Fridays, stay away from the end of the month.
Okay.
Because it causes delays at the registry, everybody's closing. So if you're closing on a Friday at the end of the month and you don't get on record, that pushes you to Monday. So you are not the owner and most likely cannot enter the property until that next week.
Okay.
So just, it's a simple tip, but it helps. Did you have a question?
Yes. Have you ever heard of somebody buying a house and land at the same time?
Well, that's what you're purchasing. Do you mean like buying like a separate empty parcel?
Yes.
You absolutely can do that. Oh, yeah, absolutely can. When you are purchasing, and the land just made me think of this too, and you have a mortgage, you're taking out a loan on the property as well. Most of the time you'll get a plot plan, and plot plans do a simple, if you're buying like a single family, it'll do a simple outline of the property. And it's helpful to see if there are what they call any encumbrances. So if a shed is on your land or a fence doesn't seem to be right, it's not as great as a survey that it's actually, by the inch accurate, but it's a good estimate of what your property looks like. So it's also helpful to take a look at. And that's done anytime that there's a loan on the property. I do have a video, but I don't think we can show it. So one thing to watch out for in this whole process is wire fraud. That is a big issue, unfortunately, right now, but there are ways to wire safely. And the biggest, because right now I'm seeing a lot, I don't know if you're seeing this a lot too, even with deposits are being wired. Because I used to have you submit a check, but I'm seeing a lot more agents using these wiring instructions for the deposits.
Mm.
If you receive wire instructions from anybody, you have to make sure you get someone on the phone that you know who has sent you the instructions, and don't use a number that's on the form that you received or the email that you received. Call them from a number that you know and verify that information. Even if you know it's right, call to verify, because it doesn't hurt to double check. You need to make sure you know who you're wiring to and who you received those instructions from. Also, wire instructions rarely, if ever, change. So if my office sends you wire instructions for your closing costs and you receive another email that says, oops, we sent you the wrong ones. No, we did not. So
Double check.
double check. A question to ask like your attorney that you're gonna be using is, how do you communicate? So I give my cell phone out to clients. So if you ever got something that you were uncomfortable with, pick up the phone, give me a call. And I'd rather you verify, I'd rather take that call at 9 o'clock at night than you send anything that you don't need to. So that goes back to another good question just to ask your attorney when you're interviewing people that you want to work with is, how do they communicate? And will you be working with them or an associate, that kind of thing. So lastly, and I know you guys have been sitting here for a while, so I don't want to keep it too long, but the day of closing, you will meet with the closing attorney, with the buyer's attorney or lender attorney, depending on how you've structured it, to sign the closing package. You need to bring with you 2 forms of ID. And if you have a checkbook, I would always bring a checkbook with you just in case there's any last minute adjustments. You're just going to be responsible for signing that closing package. The seller has to sign the deed. We have to make sure that we've received all of the final water bills, that kind of thing. The 60 certificate, and in Massachusetts, the sellers also have to provide smoke certificates. They have to have the fire department come in, make sure that the smoke detectors, carbon monoxide detectors have been checked, are in good working order and up to the code. Mentioned earlier is a closing disclosure. So 3 days before your closing, at least you're to receive a closing disclosure which sets out exactly what Bob was talking about, your purchase price, your loan amount, the insurance costs, all of that. That will then be sent to my office. We review it, make sure everybody's on the same page because we verify taxes with the town. So if there's any changes, we let them know. And you'll get a final amount to close, which will either be brought by check or wired to the closing office. You'll also receive what's called an ALTA, and it's another version of that closing disclosure. Typically, it's a debit and credit column that just shows you a breakdown of all of the fees and giving you credit for the deposits that you've put down. And 2 of the most important documents that you'll be signing that day are 1, the note, and the note's the promise to pay. And then 2 is the mortgage. One question that we get a lot that people aren't aware of is, if you and a spouse, say one person doesn't have the greatest credit, it is possible to leave that person off of the loan, but still put them on the deed to the property. So that's so only the person that's responsible for payment of the loan is going to be on the note. Anybody that has ownership in the property, both of their names are going to be on the document that's called the mortgage, because they need to be aware that there is a mortgage on the property. Should payments stop happening, they know that that mortgage company needs to be paid back. But so people often ask that question. There's a few different ways to take tenancy in Massachusetts. If you are a married couple, you are tenants by the entirety. If you are not married, but you would like to be 50-50, if anything should happen to you, it automatically passes to the other person, no probate of the court, you don't need to put in a will, anything like that. That's called joint tenants with rights of survivorship. If you're splitting it any other way, it's tenants in common. And tenants in common can be, I have 30%, you have 70%. You can split it that way. But that's just some basic questions that we often get. Do you have any other questions?
Thank you, Katie.
Sure.
Thank you.
Awesome. All right, so thank you everybody for joining us. I know it's a lot of information, so if there are follow-up questions, we definitely have business cards around, and you guys can fill out these little forms, leave them with me, and we'll have someone reach out to you, over the next couple of days. And for the folks on Zoom, thank you. I saw a ton of awesome questions coming in. I'm gonna pass those along to everybody correctly, and we'll get those all answered, and I'll upload them so you guys can all see the answers to all the questions. Once again, thank you guys for joining us. Thank you guys for presenting. Thank you. Thank you.
You're welcome.
Yeah, if you wanna email me, I'll put you in contact with the right person.
Okay, great.
You got it.
Thank you so much.
Thank you for
All right,
coming.
all right, thank you.
Is it legal to
Yeah.
have inspectors
Yes, sir. Here,
You
just in
hired
case you
inspectors
wanna email
from
me
inspector
with any of your
house
questions, I'll put you
and
in contact.
the seller?
Thank you. Yep, absolutely.
You should have two different.
This is gonna be recorded.
It is.
Okay, so I just go on Bergin in the
Yeah,
site.
if you don't mind
Okay.
just filling that out, I'll send
Yeah.
it to you.
Cool.
Absolutely.
Thank you very much.
No problem.
Something
We had 9.
Nice.
Yeah, that's pretty good.